Hello folks, welcome to Pro Trader Strategies Market Commentary for Monday, March the 1st. I'm Eric Wilkinson and you very well may recognize me as the Wolfman from CNBC, Fox Business, or any other mainstream media where I've talked about the economic data, the geopolitical environment, how that all comes in to impact the markets with some of my market analysis. I do the same thing in these daily market commentaries, but I talk about option strategies that I'm implementing into my portfolio based on the assumptions I come up with. And for you folks, what I've done with those option strategies is streamline the process in order to find the optimal option strategy for any given assumption. So please check out my webinars where I really dig into the devil of the details around each and every option strategy, which I can't really do justice in these daily market commentaries. I do try to breeze over it a little bit, but the assumption really is that you've seen those webinars, you followed my practice, and you understand where I'm coming from. All right. So without further ado, across the pond, we got German. Usually Mondays are pretty quiet, but today we got a plethora of data. I'm going to breeze over most of it, folks, because it is really a revision, the final estimate. So we've already seen the pre-numbers, and they're pretty in line with expectations there. But anyway, German preliminary CPI consumer price index 0.7%, expected to be 0.5%. And then across the pond, across Europe, we got these final manufacturing PMI numbers. All of them are above 50, showing expansion. Remember, anything above 50 is expansion in the economy. Anything below 50, contraction. All of these numbers came out at above 50 and actually very strong readings across the board, close to 60 at this point. Now, let's move back over to the United States, and we've got all kinds of FOMC members going to be speaking because it's right before the 2-week zip your lip before the FOMC meeting. So they take that chance to say whatever they want about monetary policy, because inside that 2 weeks to the FOMC, they are not allowed to say anything. It is tight-lipped. All right, so at least on monetary policy. So we do have Williams Bernard speaking, and Lagarde, who isn't an FOMC, but he's the ECB president. He's going to be speaking as well. All right, so here in the United States, we got the Institute for Supply Management Manufacturing PMI. Remember, anything above 50 expansion, coming in at 58.6, in line with expectations. The Institute for Supply Management, the ISM, that was just a market, the MARKIT number. That's what we got also across the pond, but that number came in for the market, 58.6. The ISM, which is the Institute for Supply Management, the one that we really want to keep our eyes on here, that came in at 60.8, expected to be 58.7. That's the highest reading we've seen basically since the pandemic, really. A couple of months ago, we did get a reading very close to that, but at the end of the day, we're getting back up to the pre-pandemic levels on these economic data points here. And then we got the ISM manufacturing prices paid, 86.0, expected to be 80. Now, that's the highest reading we've seen since 2008, folks. So starting to really see these prices pump up, and part of that's going to do across the board. We've got prices going up with inflation, dollars weakening. We're seeing a lot of that. But right now, we're seeing with that prices paid probably being driven up a little bit here by that crude oil data point here that we're looking at. And then construction spending coming in at 1.7%, expected to be 0.7%. So really nice reading there. All right, so that's overall economic data points. All of it pretty bullish across the pond with their market PMIs. Everybody has a PMI these days, but the markets are celebrating that. And today, probably everybody's happy. Why? Because everything is in the green, at least as of this snapshot right now. We can see crude oil up by 30 some odd cents off of the lows, but keep an eye on this 9-day simple moving average. We settled above that on Friday, bounced off of it, settled above it on Friday, bounced just below it today, hovering right on it right now, but a settlement below that is going to signal some short-term weakness. Anything staying above that, we're going to be continuing to look at this trend channel moving higher. All right, bonds. They are off on the day, unchanged, minus 1 tick right now on the day, but at the end of the day, we are pretty close to unchanged on the markets. Well off of the lows, but or a little off the lows, I should say, but well off the lows we've seen, which is a higher interest rate, generally speaking. But Friday really made that look like we were making a confirmation of a bottom here and starting to recover maybe a little bit after this really quick interest rate spike. Now, that is probably going to cause a little bit of pause for people talking or thinking about refinancing going forward. They might try and wait for some lower interest rates. So we'll have to see what happens with those data points going forward. Gold up $10, not anywhere near that 1800 that we were playing around with for the past year or so. But we are very close to this value area low. So we should start losing a little bit of this bearish momentum as we start getting outside of the value area. Remember, anytime we get overextended on either direction to the upside or the downside here, we start losing a little bit of that momentum as people will start to cover some trades and or look to add trades at those lower levels. All right. NASDAQ is moving higher by 260 odd points. Bitcoin, I don't know why Bitcoin's out of place here, but you can see well off the lows of overnight. Almost, I think it was close to a, what, $5,000 turnaround here in Bitcoin, moving to the upside, not really following lockstep with what we would expect to see from gold. Now, we've seen that as almost an inverse relationship as of lately, but today, gold, I think, is going to start making that move to the upside, especially with the strength across the board in overall dollar-backed assets. All right, E-mini S&Ps are up on the day near the highs, as you can see here, maybe just slightly off. First red candle we've seen today, as a matter of fact, as of right now. Now, obviously, that candle hasn't closed, but as a matter of fact, it has just opened, but you can see unabated strength to the upside today, mostly due to that economic data point. Also, it's driving this market is somewhat of a reopening trade as Boeing has announced that they sold 25 737 Maxes. So people starting to believe that the airline industry might start becoming a little bit more comfortable with the 737 Max. So is the consumer. Now, coming out of this pandemic, people are talking about this as being like the roaring 20s because of people being in lockdown for so long, that these travel industries are going to do very well because people are having cabin fever for the last year, haven't been able to travel. I know my wife is going nuts. She wants to go on a vacation somewhere. But at the end of the day, people are saying that once we come out of this pandemic, we could see a real massive spike in spending and travel. So that reopening trade right around the corner, folks, might be the time to start thinking about adding some of those positions to our portfolio. Now, having said that, I have not added anything to my portfolio at all. The only thing I'm really trying to get out of is my covered calls in PENN. So let me pull up that, see if I can find a PENN. Trying to get out of my covered calls in PENN. With this market moving higher, it makes it obviously a little bit more difficult to get out of those covered calls, but they're way up at 165. So I'm not too concerned about that. They're also in the March, so I only have about 18 days to expiration. We're going to really start see that thief in the night get very active the closer and closer we get to expiration, but we are getting into that wheelhouse that every single day it becomes more and more aggressive. So that is working in my favor. Yes, the directionality is moving higher today, but we are seeing this theta decay, and it's at 165, folks. I think that that is clear, way up and away. As you can see, I have three Fibonacci resistance areas above me, or above where we currently are, or below where my strike is. So I'm very comfortable with that, especially with just 18 days left to expiration. I don't think we're going to see this market really spike that high anytime soon. There's no kind of news that would be coming out to really garner that type of move at this point. So with that being said, I'm just keeping an eye on this, trying to get out of this, playing around with a couple of the other things, but haven't found anything that I really want to fire at. We can see that we got IBM finally making a move to the upside here, which is nice to see after yesterday's big sell-off. But you can see IBM loves to be stuck in this range between 115 and 130 is really the wheelhouse that is the best suited for IBM. And that's why I love doing these covered calls in this trade. Remember, I have on the March short the 130 calls, long this stock at 120, where I was put to this stock. Lowered the overall cost basis by close to $5 over the time that I've had this, which is less than a year. So staying diligent with that trade. I sold those 130 calls in there for 54 cents. It's trading right around 30. So I haven't been able to get out of those. But again, those are in the March, so only 18 days left. I'm going to have theta decay really starting to ramp up, working in my favor in this trade as well. So keeping an eye on a couple of things there. Finally, we are an educational company, folks. Please take a moment to go over this disclaimer, as I am not trying to get you guys to do these trades that I'm doing. What I'm trying to do, specific trades, what I'm trying to do is show you how we implement these types of trades into a portfolio, and therefore you can take that example, real life example, and implement it into your portfolios in your own way, all right, according to your own directional assumption. So I'm basically showing you my process to find the right strategy. In the webinars, I'm going through that process in these daily market commentaries for you folks. And ultimately, what I hope to have happen is that you guys can look at these real life examples and say, hey, I've got a very similar situation with this XYZ underlying. I'm going to implement it into my portfolio like Wolfman did with IBM or something like that. All right. So that's all I got for you folks. I'll see you tomorrow. If you can't take that, take it easy.